You're looking at the yearly chart, but this is only going back to what? July, probably, February. Okay, February 25. It's the whole year right there. Go to 3-year chart. Get a little bit more context. Look at this thing. This is a battle right here that's going on. This range that we're in, we've been kind of zoom in a little bit. So we're definitely what I would hope bottoming out here. See that big long wick down? That's an exhaustion candle right there. So that's like a bunch of sellers that just piled in, and then you see the wick back up. Yeah, that's called like a shakeout is what that is. A washout or a shakeout, where you get a ton of downward momentum, and then buyers finally step back in and you get this nice strong bounce. We're getting a little bit of follow through after that. And then what I'm hoping is that we continue to hash out like a nice solid level here. So you might see Bitcoin stagnate around these prices here in between like the 60s and the 70, maybe even 75 for a little while longer, but that would be really healthy if we saw that. And that would form a nice bottom, and then you could really kind of pile in to a long if you're bullish on Bitcoin. So even though we're up strong today, I wouldn't read too much into that. But you do have, go back to your positions, you do have that Bitcoin position that's probably working nicely today, but it's down overall. IBIT up 300 today, down about $1,000 overall. And notice one of the beneficiaries of this is Coinbase. Look at your coin position. Remember we talked about how much you had left to make in this. Now you're really, I actually rolled out to April and took in like another $5 in credit. So you went from March to April. I think I did that yesterday. And took in another $5 in credit, but now you're getting this really solid up move. So you're up another $660 just today. So I would probably look at what's your extrinsic value left in that call. It's probably like about $10 left in it. Yeah, $10, $9.40. So you already made half of what you can make. You have another 50 days. That's using how much in capital? It's like
40.
Yeah, about $5,000. I would probably take your profit right there, honestly. And then maybe look at just close that out. Yep. Did not get filled. You might have to tick it down to like, try ticking it down to like 40.
Like that?
Yeah. Chase them. Just let that sit for the rest of the show. Don't chase it. That's good. All right. Actually, I was going to say, yeah, don't chase it. All right. Scroll back over to left. You'll notice that Angel Studios got a upgrade on some analysts, upgraded it today or rated it at a buy rating. So it's having a nice strong day. It's up about like, I think 13-14% for Angel Studios, making some money back in there. It's about freaking time. You need that thing significantly higher. Not going to do anything in there. Archer, everything's up in your portfolio today. You got Oracle is your biggest winner of the day, followed by Coin. Bitcoin's a nice strong winner. MU, you're still overall down in MU. What's going on in MU? You've got your strangle is really weird because that put, we sold that put at a time when this stock was, I believe, significantly. It must have been. stock must have been higher because look how much your call has depreciated. So we must have had a pullback for the call to depreciate that much. Okay. I think you just continue to leave that. You don't touch that at all. Then MP is working for you today as well. MP, you're already positive in MP by $800. What's left to make an MP if things go? So you got your March 70 in the money put there. How much do we have left to make by movement of the actual stock price if we're shareholders?
Like $6?
$5.50. We have $5.80 in extrinsic value, and then if we get assigned shares prior to that April expiration, we have another $5.50. So there's
$11.30.
$11.30 total left in this that you could possibly make. The only way that wouldn't be the case is if this thing ripped to the upside and you actually. So if this thing rips to the upside and goes above that 70, then you're not going to get assigned shares. The person's not going to assign you shares anymore if it's above 70. Then you're going to be in an inverted upside down strangle. And you'll have to roll and readjust that March contract out. Make sense?
Yeah.
Kind of. So that one I would say leave on. I wouldn't really touch that. You did not get coin filled. They really don't want to come to you on that. We'll just leave it. You've got your oil position. I'm still waiting for something to pop off with Iran here. Oil looks like it's down today. But it's really been in a tight range over the last few days, just moving about 50 cents a day. A lot of implied volatility in there, just waiting for something to pop off over in Iran. Look at Unity. What do we got going on in Unity? It looks like this was a roll, actually. I think I originally sold the 17 in March, and it looks like I rolled it out to the 16 in April because your overall, this is how you can tell that you've rolled this. You're overall profitable by $37 in this open position. But if you look at your year to date, you're still down $4.50. So that means you more than likely had a position on before that. You would have had to have had a position on before that. That would account for that negative $4.50. So that means you had a short put on, it got tested, you rolled it out, took in more credit, and now you're making it back. But you're still not red or green. Oracle. This thing is yuck. Let's look at Oracle and let's look at Netflix. Netflix up to 72 today. Holy mackerel. I rolled Netflix out for you yesterday too. All stuff we probably should have done here on the show, but look at your Netflix was a 87 in the money put against a 85 inverted strangle and 85 call. So you had the 87 in the money put that was short, and then you had the short 85 call. So it was a $2 inverted strangle. I rolled that from March to April, and look, I did it for a credit. And I inverted you by $5. So now you're back into a regular strangle where the put is below the call and you have a $5 gap between the put and the call. Still leaning long delta in there, and it's working today. So you made back a hefty chunk of the L in there. You're still overall down 500, but you've got a $5 wide strangle now. And you've got a total credit in there, or not a total credit, but a total value of extrinsic value left of, a potential of both of them expiring being worthless. If you can get anywhere in between that 85 and 90, they have the potential to expire worthless, and there's a total value in those contracts of $7, $8, so about $9. So you still have $400 of profit potential around that in there. So you're not in a terrible position in there either. So that just needs more time. We looked at MP, Oracle. You're still really, really far in the money in Oracle. Oracle has earnings coming up relatively soon. Did you get filled in something? I heard a ding.
Yeah.
You got filled in your coin. See, patience pays. You could have chased that, but you would have been giving away money. Patience pays. So you made $1,000 in coin. Now you also freed up about $4,000 in there. So go back to coin. Go to details in coin. You might have to type it in up top. There you go. Coin. Show details. Go to options. Go to April. Open the April contract. Go to your put side and go like the 150 put. Sell one of the 150 puts and see how much they're going to charge you for selling one of those. For 610, review, 1,500. Yeah, I like that a lot better than that. All right. So effectively, you went from having about almost $1,000 left in potential profit at the covered call position, but it was holding, remember, it was holding like $4,800 in capital, right? Mm-hmm. Now we just used, what was that, 1,600, 1,500?
I think it was 16.
Okay. So we used a lot less capital and we still have 60% of the profitability there. So we can't make the full 1,000 now. We can only make 610 or whatever you got filled at. But your capital, proportionally, the amount of capital that you're using to make that money is like a third. So for a third of the capital, you're able to appreciate nearly 3/4 of the profit, which is really good. It's a smart use of capital to do what we just did. Close out the covered call because shares are more capitally intense. They require more capital to maintain that position than an out of the money short put. So we're still expressing a bullish opinion in there. We're saying we're going to take the shares at what price?
150.
150. And our cost basis on those shares is going to be what if we do end up taking the shares?
Ouch.
We collected $6. What's our cost basis for taking shares at 150? Not a trick. If I give you $600 and say buy this, or if I give you $6 and say pay me 150,
144.
Yes. So our cost basis, our entry point into this is 144, or about $40 away from the current stock price. So we're giving ourselves, what is that in percentage terms? About 20% room to the downside of a move in here. And then there's one other thing I wanted to do in here today, and this is going to require, you have Chat GPT on that tablet?
No. I'll look it up.
Yeah, just open Chat GPT a math, and we're going to use Chat GPT to help us figure out what our actual cost basis for all of our shares in Angel Studio is. So we have 1,000 shares, we have 5 short puts, and 4 short calls in there, right? So now go to orders, go to all, go to filter. Today is February. Go to ANGX. You got that in there. Okay. And then today's February 26th, 5th, 6th, 5th, 25th. So go back. No. That's the backwards. So go like we started this in October, right? So like go before October. Go to like September or August or something. Yeah. So before we started. Hit it. Yep. Apply. We're going to find all of the transactions in here. And then we're going to take a screenshot of this.
Mm.
Do you know how to, okay. Now you're going to go to ChatGPT. You're going to upload that screenshot. Okay. All right. This is a better quality. All right. Now I can actually read it. Let me zoom in a little bit. All right. Now go back to ChatGPT. Let's check its work. One contract at 135. One at 197. I'm just going to read it. You say if I'm incorrect on any of them. 3 at 101. 3 at 60. 1 at 147. 3 at 70. 1 at 40. 3 at 175.
Wrong. 3 at 75 here.
That counts for $3 of credit. So what was the total if we add $3 onto that?
24.
There's your error. It was right. That's what it said the first time. It didn't read it correctly. So it is 2412.
So I guess the other one's better.
The other AI was better than this one. I read it better anyway. All right. So say that's wrong. You read it incorrectly.
Oh.
You can correct it after. That actually doesn't have anything to do with.
What did I say?
Oh, hang on. No, this is just giving us the cost basis on the shares. Hang on. Go back up. What the question that you asked it was, I currently have 1,000 shares with a cost basis of $6.41. I also have 5 short puts at the 5 strike expiring soon. If I get assigned them, what will the new cost basis be? This will still give us a correct answer. So go down. It's just calculating the new cost basis on the shares. So if you have 1,000 at 641, you get 500 more at the $5 price point. That's going to bring your cost basis down to what? Scroll down. New cost basis is going to be $5.94, right? So overall, the average price that you pay for those shares is $5.94. Now tell it you were wrong on the total credit. It's actually 2412. You read it wrong. $24.12. That's good. That's good. Just tell it that. Thinking. It's going to say, oh, got it. Total credit, 24. So now, with a new cost basis of $5.94 on 1,500 shares, what's the actual cost basis when we take into account the total credit? Or is that what it's doing right there? 432. What is it saying? If the net credit should reduce your cost, not including the 641. What is it? I think it's already doing it for us of reducing the cost basis. So just ask it this. On 1,500 shares, with 1,500 shares with a cost basis of $5.94, what's the new effective cost basis if I've collected $24.12 in premium against it.
How much?
$24.12 against it. Against the shares. I want to make sure it's thinking about this the right way. There you go. I think it's going to be that 433. So effectively, in order for you to be profitable, given all of the credits that you've received in here, so go back to your Thinkorswim. I go back to your positions tab. Back to your positions tab. So now the stock is currently trading at around $3.64. In order for you to be profitable in this stock, even though if you go scroll to the right there, you see where it says you paid, go back, where's your cost basis? Even though you paid $6.41 for those 1,000 shares, in order for you to actually be profitable in this position, those shares only have to go back, because of all the credits that you took in, they only have to go back to $4.33. Or basically, scroll back to the left, if it's currently trading at 433 minus, you need a 70 more cents rally in order for you to overall break even though you paid almost twice what the stock is currently trading at. Isn't that crazy? All because you collected premium over, how many months is that? If we started in October, so about 5 months worth of premium collection, you reduced your cost in this particular stock, owning this asset, by almost 50%. You went from, not almost 50%, but by around 40%. You went from $6.41 down to $4.33 in a matter of 5 months. Imagine what if you did this same type of strategy for a period of 2 or 3 years. You'd effectively own the asset for nothing. You'd have collected so much premium against an asset that the cost basis is zero if you did this for another 10, 20 months. So that's what I'm trying to demonstrate here. The power of short premium when it comes to building a position like this and how you can use it to your benefit. Now, we are going to have to take advantage of certain market conditions when you do this. So like, we're getting a stronger rally today. If we get more of a rally in the near future, you're going to see these calls that are currently trading for like 22.5 cents. You see this April call for 5 call, 22.5 cents. You're going to see premium start to pump into that if you get some upward momentum. And then we're going to have to look at maybe selling a few more calls, because you want to always be selling the calls into a nice strong up move, because you'll get more for them during that time. So we'll keep an eye on that. Hopefully with this upgrade that they got, or this buy rating that just was published today, this momentum can hopefully continue a little bit, and we'll be able to get some more premium sold against these shares and reduce our cost basis even further. But that's all that I had for today. You're sitting on a hefty amount of cash available to you, but I'm not in any hurry to get that allocated. I think we just kind of call it there. Oh, HIMS did have earnings, so I did make an adjustment in HIMS. We didn't cover that. We'll go over that real quickly. So HIMS did have earnings, and they basically are up a little bit. They didn't move much at all, but I did take your 20 strike put in March and rolled it out to May and collected basically $1. But I think our overall credit in there was around $4.20 with a $6 wide inversion. Now it's $5.20 with a $6 wide inversion. So still leaning super long in there. Got a little bit of a move to the correct direction that we want, and took in another $1 in credit. So we reduced our basically locked in loss if we end up in this $6 range by another dollar. So we're looking at, if it ends anywhere between 20 and 26, we're only going to be out $80. And you're talking, when we entered this particular position, the stock was in the, I think it was in the mid to high 30s, and we sold the 29 put. So initially we entered this with a 29 put. The stock is now half that price, and we're only down 600 overall dollars. So whereas had we just bought the stock, we would be down $1,500. So that's the flex. That's also demonstrates the flexibility of short options as opposed to just buying calls or buying the stock. Because if you bought the stock, you're down 50%. We said we would buy the stock at a lower price when it was 100% higher than where it currently is. And we've been able to roll out, collect more premium, get us to the point where our effective cost of taking this stock would be what? If we have a $6 wide inversion and we've collected $5.20, if we get assigned shares at $26, what's our cost on those shares?
15.
No. We've collected $5.20. If we pay 26 for the shares, what's our cost?
21.50 or 20.50.
20. We've collected 520, so it's 20
or 20.80.
Yes. So we took this from being willing to buy it at 29 all the way down to now, if we take the shares, we're going to take them at a cost basis of $20.80 per share, which isn't good. We're still, $4, $5 away from that. So we're still going to be looking at the, right? Am I correct on that? Yeah, we're still going to be $5 in the hole, or $500 down. But it's better than the $1,500 down if we had just went out and bought the shares at, $29, or at the time, I think it was even trading at like $35 when I sold that initial put. So we would be looking at a $2,000 loss if I just went out and bought shares as opposed to selling a put. Now we're looking at potentially, at the current stock price, a $500 loss. So just wanted to point that out as well. All right. I think that's all I got, unless you got any questions. You're doing solid today. You're up $3,000 plus today. Your account, you were down overall like 10 grand in this account. With this move, you need basically 2 more days like this to get back to freaking even, dude. You need 2 more $3,000 days, which is not impossible. If we continue with Oracle, if we continue to get some upward movement in Bitcoin, Angel Studios, and I'm hoping that we see some instability with oil here soon, so we can get out of those contracts. But if we get some of those moves in the near future, and MU is also working nicely, everything's working nicely. You just need like two more good days, and you'll be right back to where you started from. But nothing? You got no questions? All right. Well, you got a lot of editing to do with this one. Have fun with that. Thanks for watching. If you guys enjoyed this, don't forget to like, subscribe, come on over, hang out with us in the Discord. We got a bunch of stuff we're working on. What else? Yeah, I think that's everything. We'll see you next time.